Hi. In one of my recent market commentaries, I made some predictions for Australia's property markets over 2011, and in fact beyond that. My first prediction was that most predictions would be wrong, because they always are. I also warned that there'd be some unforeseen X factors that take us by surprise. And you know what? Since then we've had floods, earthquakes and even a nuclear accident. And if history repeats itself, there's going to be other X factors this year. I also predicted that most investors would get it wrong this year. But I said that those who'd get it right would do very, very well and set themselves up for success in the years to come. Now, sure, our property markets have slowed down and the next couple of months might be choppy as buyers and sellers work out what's ahead. However, although the doomsday speculators would like us to believe that the end of the world as we know it is coming, the truth is we're not in for a property crash. There are always peaks and troughs in the property game. That's just the way the property market works. Now, before I go on with my commentary and explain to you what's ahead, I'd like to let you know quickly about my new book, What Every Property Investor Needs to Know About Finance, Tax and the Law. If you want to build a true property investment business, you need this book because it will show you how to make your money work harder, because it's not how much money you make, it's how much you keep and how hard it works for you. So we show you how to use the system to work for you, not against you. And my co-authors are specialists in finance, tax and the law. Click on the link below and get your own copy now. Okay, back to our property markets. At times of change, like we're experiencing, it's always good to go back to the basics. So let's look at the fundamentals, those that affect our property markets, and let's see how they're going to play out over the next few years. I see the key drivers of our property markets as follows. Number one, we've got a strong economy. You see, Australia's economy is continuing to grow strongly when many other of the world's major economies have struggled to record any growth. Our economy is booming, but of course that's largely due to huge offshore, mainly Chinese demand for our commodities. And currently we're amongst the world's strongest economies. In fact, the Reserve Bank predicts this is going to continue on for some time and forecasts GDP growth in excess of 3% over the next few years. You see, we're experiencing a resources boom, and that's giving us huge capital expenditure. The mining companies are bringing all this money into our country, and that's going to boost our economy and create jobs. But at the same time, commodity prices are also booming, helping boost our export sales and bringing overseas money into our country. Another fundamental that's important to understand is our employment growth. You see, we've created around 230,000 full-time jobs last year. Unemployment is low and job participation is at record highs, which means wages, especially for certain jobs, are likely to keep rising. Another important fundamental is that inflation is under control. Our CPI is now back within the Reserve Bank's target range, which means the Reserve Bank's not going to really need to be aggressive with interest rates, not for a little while yet. However, probably later in the year there's going to be another 1-2 rises of interest rates that will increase them by about 0.5%. Another important fundamental is our population growth is amongst the highest in the developed world. Now, even though our growth isn't at the record rates it was a few years ago, our high population growth, around 1.7–1.8% per annum, coupled with the undersupply of dwellings, especially in some regions, and low building approvals, is going to continue to put pressure on our housing markets. Another important fundamental is our ongoing property shortage. You see, despite our increasing population, new housing construction is at 30-year lows, and a government body, the National Housing Supply Council, estimates that our undersupplies are around something like 200,000 dwellings. And with development approvals being hard to come by and funding for new developments tight, it's likely that this undersupply is unlikely, I should say, that this undersupply is going to change anytime soon. Another strong fundamental for our property markets is our increasing rents. You see, vacancy rates are at low levels and we've got a huge surge in demand. 2011 is likely to be a year of very, very strong rental growth. Still looking at the various fundamentals, there's going to be increased market confidence as the year goes on. And as we get a perception of wealth, it's an intriguing factor, this, because when it comes to performance of the property markets, how we feel, how wealthy we feel makes a big difference. Basically, when we feel wealthy, when we see our economy doing well, when we're confident in our jobs, we're more inclined to spend money. Now, most experts predict that employment levels are going to remain strong, particularly in skilled trades. And think about all those trades having to go to Queensland to get it back on track, to rebuild the homes and infrastructure. So all this means our economy is likely to remain very robust, largely due to the Chinese-driven resources boom. And in fact, the Reserve Bank suggests that could well go on for another 25 years. So while there are all these mixed messages in the media, more Australians are feeling a sense of financial well-being. And this looks set to continue well into next year. This type of ongoing prosperity will continue to boost market sentiment and encourage people to start investing. They're going to buy houses to live in, cars, they're going to buy properties to invest. And another important fundamental to consider when we're looking at what's going to happen to our property markets are the buyers that are very likely to return. You see, as the year moves on, we're likely to see 4 types of buyers in our market. Number 1, first home buyers. They've been sitting on the sidelines, but as rents increase, many are going to have to take the plunge into the property markets. Number 2, investors are going to return to our property markets, buoyed by just a general market confidence and increasing yields. Number 3, I think more properties are going to be bought by self-managed super funds this year as investors take advantage of the new laws that allow super funds to borrow to purchase property. And the 4th trend that's going to bring more buyers into the market are overseas buyers. They're going to keep buying properties because of the security and the stability of our economy and in fact of our political environment. Now, if you think about it, interestingly, all these 4 groups I've just discussed are likely to buy properties in much the same price range, somewhere around $400,000 to $700,000. As 2011 pans out, our key residential property fundamentals, all of which are positive, they're all going to start to come to the fore. However, there's one fundamental that could negatively impact our property markets, and that would be rising interest rates. Because already some first home owners are starting to feel the pinch. But the bottom line is 2011 will not be a year of booming property prices, but the flip side is there's not going to be a property crash either. So what's a property investor meant to do? Well, one thing that's important if you want to know the right thing is to get independent and unbiased information that's going to allow you to have the right perspective on what's going on. In other words, you've got to listen to the right people. And that's why I invite you to join me, along with finance expert Rolf Schaefer and leading property accountants Ed Chan and Ken Race for our upcoming seminars, our market updates for 2011 and beyond. Now, Sydney and Brisbane events were fantastic. They were sold out, and we're going to hold an event in Melbourne tomorrow, if you're watching this newsletter when it comes out on April the 2nd, and in Perth on May the 7th. When you join us, we're going to give you strategies you're going to need to take advantage of the current opportunities, and there are some in our property markets today. We're going to debunk many of the myths perpetuated by the media and explain what's really going on in Australia's economy and housing sectors. So please don't miss out. If you're in Melbourne or Perth, click on the links below and join us, and then you can bring a friend for free. Of course, I'm going to keep you up to date about how to take advantage of the changes happening in our property markets in future updates. But it's also probably worth reminding you that in changing times like this, no one can help you quite like the independent property investment strategists at Metropole. I'm really proud of our multi-award winning team because they've got no properties for sale, so their advice is unbiased, it's independent. If you want to find out a bit more about what's happening in your local markets and what our research suggests in store for you, join us in our offices in Melbourne, Sydney and Brisbane, or with our associates in Perth. Just click on the link below to reserve your place. And of course, there's just so much happening in our property markets nowadays. I'm going to keep you updated, in fact, almost every day in my blog. Now, that's very different to this update, so if you could subscribe to it by clicking on the link above there, that's a different subscription to my main newsletter, and it'll give you short daily updates. Have a great week. Make it a great week. This is Michael Yardney.